This is Financial Tech and the Guide Rock Capital Management weekly commentary for the week of March 4th, 2013. I am your host, Jim Collison, broadcasting live from the AverageGuy.tv studios here in Bellevue, Nebraska, and we post the show, including the written commentary, each week out at the AverageGuy.tv. This weekly commentary brings you market commentary from the award-winning Andrew Hunt, CFP, and president of Guide Rock Capital Management here in Omaha, Nebraska. If you'd like to receive the commentary in advance, just send us an email, andrew_hunt@guiderockcapital.com, and put subscribe in the subject. If you have questions or comments that we can read or answer on the show, you can send us an email. Just send that to me, podcast@theaverageguy.tv. And, of course, you can find us both on Twitter. I'm at Jay Collison, and Andrew is at Andrew D. Hunt. Andrew, it's great to have you back this week. Big news going on, and I know you got some great updates for us. What do you have?
Yeah, thanks, Jim. Well, it was a bumpy week in the stock markets last week. Early on, I don't know if you guys watch the ticker symbols and such, but early on, there was a lot of negative press coming out of Italy and the Italian elections. The anti-establishment star movement won about a quarter of the votes in the country's upper and lower houses. And so there was a lot of investors that got really nervous because they anticipated some pretty serious gridlock that could potentially delay Italian economic reform. And since Italy is the third largest economy in the Eurozone, and it turns out that their public debt is significantly higher than their GDP, a stalemate or gridlock really could have had a negative effect on the Eurozone. But as the week moved on, those events in Italy were kind of overtaken by stuff back here domestically at home. Ben Bernanke reiterated that the U.S. plans to keep monetary policy loose until unemployment levels drop. And so that was good news for the markets, and we recovered some lost ground. And ultimately, we ended up ending the week as the Dow Jones reports, the NASDAQ and the S&P 500 higher, and they finished in positive territory, which was great. And then, kind of to wrap up the political hubbub, no action or preventative measures or modifications or anything took place before Friday, March 1st to stop this ever so wonderful sequestration we've been hearing about in the news. So it turns out that over the next decade, sequestration is going to cut about 1.5 trillion with a T dollars from government spending. So those cuts will reduce defense discretionary spending, which is things like weapons purchases and base operations, construction work, and such. It'll also reduce some domestic spending, and two of the programs that are most likely to be hit the most would be the Unemployment Trust Fund and Medicare, specifically Medicare's provider payments pieces. So there's going to be some cutbacks. Congress could just not get it together to change that, and so here we are, ladies and gentlemen, sequestration.
Andrew, can they fix that later? I mean, can 6 months from now they come in and pass a series of bills to stop that again and go back to the way things were before? Or are we in a 10-year spin that is going to put us back on track?
Well, the nice thing, Jim, when you create the rules, you have the luxury of being able to do what we call retroactive legislation, excuse me. And so, sure, they made up the sequestration rule, so they could probably change it if they got some votes and such. I'm not a lawyer, and I'm not an expert, and I don't claim to be an expert on political process. But I'm pretty sure that when it's a rule you made up, you can change it. So
they can always, later in the year, they could go back and put some things back in. While it's sort of created a little bit of a panic among people, it's not like the markets really responded to that, right? I mean, do you think the markets just kind of believe that they're gonna do that? I mean, is that what the market thinks, you think?
Well, I think, there's two schools of thought. Some people are saying, hey, sequestration is good for our economy. We need to cut back on our spending. Other would say more of the Keynesian theory type folks would say that government spending stimulates economic growth. But ultimately, stock prices and stock markets are leading indicators. And so what that means is when we see something on the horizon, when we anticipate future movements, that tends to be built into valuations in advance of the actual event. It's when surprises and uncertainty arise where we see really big moves. So frankly, I think with all of this gridlock that we've had here in the U.S. Political system, I think people were just anticipating, hey, they can't get it done. Nobody can seem to agree on anything.
So the market anticipated this, is what you're saying?
I think so. Yeah, right. But yeah, because you're right, we didn't see much of a move March 1st when that happened.
Very cool. What else you got for us?
Yeah, so the National Retirement Risk Index out of Boston College measures whether Americans will be able to maintain the same standard of living that they enjoy today after they retire. It's a really interesting index. If you have a chance, go check it out. Well, the last time it was updated for 2012, the index showed the number of at-risk households had increased by 9 percentage points from 44% to 53%, and that's from 2007 to 2010. And obviously there is some narrative explanation for this out of the group from Boston College, and they attributed this very significant change as a combination of effects from the financial crisis, poor investment returns, low interest rates for savers, and then the increase in Social Security's full retirement age. I mean, that has a huge impact as well. So one of the things that the 2012 Retirement Conference survey found was that almost 1/2 of working Americans are either not too or not at all confident that they'll have enough money to live comfortably throughout retirement. Now, this isn't shocking to me, Jim. It's my full-time job, so I always joke that I have ultimate job security. There's a lot of work to be done, but it's important for people to evaluate their current retirement plan and really kind of stress test it to make sure that it's going to be effective. And there's a couple really significant risk areas that I think everybody should think about. The first one is longevity risk. And this is the risk that you outlive your retirement. There was a recent headline that suggested that age 72 is the new age 30. The scientists who made that determination meant that the modern man at age 72 has the same chance of dying as a primitive man did at age 30. So that makes longevity risk a pretty serious consideration when planning for retirement. After all, who wants to outlive their retirement money? That would be just terrible. And so you really need to analyze your retirement strategies to make sure that you're going to be able to generate income for as long as you need it. The second issue that people need to focus on is inflation risk. Inflation is merely your purchasing power being diminished over time. So, for example, a gallon of milk that cost about $2 in 1990 cost about $3.50 in 2012. So that's a pretty significant amount of inflation, and actually in that period, we had massive growth in the country and relatively low inflation. So just imagine in a high inflation environment that could get kind of scary when we print too much money as a country. So a well-allocated, well-diversified portfolio can have some potential to outperform inflation over time, and we would recommend that you're thinking about that as well. Ultimately, if you have questions about retirement or you want to review your retirement plan, GuideRock would love to help you. Feel free to give us a call or shoot me an email or send me an in-message on LinkedIn or Twitter. So here we go. Here's the quote of the week. This is a Chinese proverb. When planning for a year, plant corn. When planning for a decade, plant trees. When planning for life, train and educate people. Chinese proverb. Very nice.
Andrew, good work this week. I think we'll wrap it with that. I think folks will want to, of course, keep an eye on the news as we get farther away from last Friday. I was kind of watching the news, and of course, President Obama making the announcement that it felt like the government was going to shut down, and we woke up this morning, and the roads were open, and everybody could get gas, and
right.
And so we've made it through another one, and so but keep your eyes open. And Andrew, of course, you're a resource And if anybody has questions, they can always send you an email to Andrew_Hunt@guidrockcapital.com. And if you're new to podcasts and looking for an easy way to listen to each week, you might want to find an easy way to listen to this one. Maybe you're coming out to the website to get it. You can get it to your phone and deliver it to your phone, maybe listening to it in the car each and every week. You might want to consider using Stitcher, available in any browser as well as both Android and iPhone, and that's where it's the most powerful. It's a great way to listen to the podcast at home and on the road. Listening on the road is great. I mean, for most people, the average commute is about 37 minutes, so you would be done with this by the time you got there for sure, and you could still listen to your music. This show and all past shows are on Stitcher, Stitcher.com. Search financial tech. It's education for your ears. And be sure to visit Guide Rock Capital. Just head out to guiderockcapital.com. Follow Andrew on Twitter, Andrew, the award-winning Andrew D. Hunt, on Twitter at Andrew D. Hunt, and get all the show notes for this show out at theaverageguy.tv. Now, Andrew and I say thanks for listening, and we'll catch up to you next week. Remember, be smart about your investing. Guide Rock Capital Management, Inc., or Guide Rock, is a registered investment advisor that is registered with the state of Nebraska and located in Omaha, Nebraska. Guide Rock and its representatives are in compliance with the current registration requirements imposed upon investment advisors in the states in which they maintain clients. Guide Rock may only transact business in those states in which it is registered or qualifies for an exemption or exclusion from registration requirements. Important information describing Guide Rock's business operations, services, and fees can be viewed on the SEC's website at www.advisorinfo.sec.gov. Guide Rock will provide Form ADV Part 2, which serves as the firm's disclosure document to all clients. Copies of Form ADV Part 2 are also available to interested parties upon request. All investment strategies have the potential for profit or loss. Past performance is not indicative of future results. No current or prospective clients should assume that the future performance of any specific investment strategy, or product made reference to directly or indirectly on this video, website, or indirectly via hyperlink or any affiliated third-party website will be profitable or equal to past performance levels.